some kind of ICT name out there that I learned 2 years ago, and I've altered it to the point to where it fits my trading style. So this might even be the exact model of somebody else that I learned from years ago. Okay. But I don't remember. All right. So I'm just going to teach you what I do with this model. Okay. In alignment of my higher time frame analysis, please do not trade any entry models without the higher time frame analysis. You don't necessarily have to have a daily bias. Okay. I trade against my daily bias at times, but I am very aware of what is going on in the higher time frames. Okay. That being said, I wouldn't take a sweep of London if I'm like running right into a high time frame fair value gap. Okay. And I'm showing a market maker, model that's in the opposite direction. Okay. Um, anyway, so do your high time frame analysis, do your due diligence, give your business what it needs to be successful, which is your hard work and your attention in the areas that it needs, which is a top down analysis. Okay, so do your top down analysis. All right, enough said. Here we go. My favorite is sweep of time based liquidity, and a couple of my favorite time based liquidities is Asia and London. Okay, I always have this on my chart. Got the highs, got the lows, got the London high, London low. What did we do? Kind of consolidated in the morning a little bit, probably pulling a bunch of longs. We start pumping. I'm sure some people went long. Where are we going to go? London high, Asia high. Let's rebalance this. What do? We manipulated down. Okay, so 1, we have manipulation down. All right. 2, we sweep the low, London low, Asia low, whatever. We sweep this time-based liquidity. And what do? Almost immediately, start pushing back, and we start displacing in the other direction. Okay. So we create this fair value gap right here. Boom. All right. What do? We pumped up. We came back down where? Right into that fair value gap, and we start launching out of it. That's where I would have triggered the trade. All right. Sometimes I honestly, I do market orders. I don't limit order. I should limit order, but I don't. I'm just quick on the draw, and it's just what I like doing. Okay. A lot of people could argue with that. That's fine. You could set a limit here if you're really looking for it. Or as soon as we dipped in, I bought in somewhere on this wick. Okay. I just hit the market because it was starting to, it came in, it swept, and then it starts going back up pretty quickly. Market right in. Boom. All right. I'm happy with that. So I kind of moved it a little bit up the candle just to make it a little more realistic on where I would have entered. And in this trade specifically, I was getting a combine funded. So I actually got out of the trade up here. All right. Because mathematically, that's just what I could make for the day because there is a limit. On a funded account, which I've traded many times, and I've traded this exact setup many times, boom. I aim for the Asia high. There are times I will take some profits at the London high, but I always pay attention to my RR. Okay. If I take too much out on the trade here, then by the time we get to the Asia high, maybe I'm sitting at like a 1.5, a 1.6, and I don't like that. Okay. I really like to be 2 plus. Okay. So this one, most likely in a funded account, I would have held all the way. I just know myself very well. All right. Pretty simple. Okay. Now, when I entered the trade, we came in and we danced around a little bit. What do? We put in a new fair value gap right here. Okay. Now, I want you to pay attention to this. Put a new fair value gap right here. What did we do right here? We swept London highs. Okay. This could have been a mini scalp. Swept, created a little fair value gap. Boop. Right there. Could have entered the trade right in here if you wanted. Scalped it down to where? This little inefficiency that was created. Boom, we touched it, we took off. Okay. Not something I did. I'm just saying it's something that's there. It's a little precise for the way I trade. This would have been a super low time frame trade, but it's just to show you that this model can work on the lower time frames as well. All right. So once we come into this rebalancing this inefficiency here on this fair value gap, what do? Where do we go? Pretty much straight to London high or Asia highs. Boom. Trade over. Fantastic. Okay. That's what I like. All right. So yes, these 3 trades I took. These were real trades I took. I'm being honest where I got out and reasons why. How I would have traded them on my funded. And then I also did take some other losses in here as well. So I'm still getting this account funded, almost there. Because usually if I nail 2 of these in a row, I'm done. The account's funded. Okay. But I got a little room to make up on some of the other ones. So here's another one. And this is yet again a trade I took. Pretty much I took just past London. I took all my profits. Yet again, I was shooting for a combined and I had a maximum goal. Okay. All right. So here we go. In the morning, we have our Asia high, we have our London high. Okay. What did we do in the morning? Kind of consolidate a little bit. We pumped, right? And so now, people are probably looking at taking longs. Looks like we're going to go higher. We're going to go higher. We even displaced down a little bit here. And then this is where I started paying attention. Okay. So we create another fair value gap right here. Okay. We have this candle, and this candle, and there's a fair value gap. So we swept time-based liquidity. We consolidated a little bit, and then we create this fair value gap. All right. So with the consolidation, a lot of times they will sweep that consolidation really quick for the massive move. Okay. So I was prepared for that in my mind. But I took this trade as soon as we came back up and we pumped into it. Okay. I took the trade in here. Okay. And I was prepared. The stop loss was a little bit higher over this because I was maybe anticipating a little local sweep and then a pullback. But it didn't happen. So they just kind of came up and, pretty much right into these wicks, and then they call it good. Okay. The reason why I was able to give this trade a little bit more of a stop loss is because my target would have been, it was London low because I was trading a combine, but Asia low, it was a like 5-to-1-2, right? So this is great. All right. So we swept the time-based liquidity. Sometimes if we create a consolidation like this at the top, they will sweep that one more time and then move. But we swept the time-based liquidity. I get the fair value gaps that are pushing in the right way, right? Being created, the bearish fair value gaps. It gets respected after it plays around for a little bit. So this trade, of course, I'm like, I might get stopped out on this one, but I didn't. So sometimes I do, right? There's no trade entry model that's going to be 100%. So once it starts pushing down, it starts moving, then I know I can take profits, right? Like I said, I shoot to average well over 1 to 2. I'd like to see 1 to 3 as an average. That's fantastic. Some of my best months have been like 1 to 6. Okay. It usually does not happen, but sometimes you get on a streak and you just your models play out well and you do well, and then sometimes you don't. Sometimes you end up like 1.11 or something like that, and it's a much harder month and your profits are much lower. But on average, I like to be at that 1 to 2, 1 to 3. Okay. So this is a nice little trade right here. It was pretty straightforward, straight down. And so one more was this day right here. This day, 8:30, probably news. I don't remember. What did we do? We blasted through both of these highs very aggressively. Okay. So though I would be paying attention to shorts here with this kind of push, I wouldn't be looking for any shorts unless we were to actually flip this giant fair value gap right here, right? If we started pushing bearish below it and then maybe retested it, maybe I would take a short into the Asia lows, or if there was, liquidity lower that we could be aiming for, I would aim for that. Okay. But this was an aggressive push through. Boom. Okay. And so when we came back in, and what did we do? Almost exactly to the 50% on this fair value gap, and we start pushing up. And when we're pushing up, what are we creating? Fair value gap. Okay. So right here, I'm looking at getting in on this now. All right. And so we push in and we start pushing up. We didn't really get much of a retracement, so I ended up entering in these candles. right here. So right here, right here. Okay, I entered the trade. I'll put it right there. That way it's kind of in between somewhere where I entered. All right. And so I just dropped this 1 candle, 2 candle, 3 candle. Here's a fair value gap right here. Okay. Here's also one right here. So pretty much the stop loss is below one of these wicks. I would have chosen the longer wick here. Okay. What does that give me? A 2.85 roughly. Okay. Give or take a little bit. So to me, that's a great trade. That is a fantastic trade. It looks like, yeah, we hit it. Okay. I ended up, yet again, same thing. I'm trading a combine right now, so I got out a little earlier because I hit a goal, and that was it for the day. All right. So this is the entry model. All right. When we blast through these, time-based liquidities, and then we come down and we respect a fair value gap like this, then I'm looking for a continuation. Okay. When I see a flip, right, then that's where I'm looking for, that we're going to go to the other direction. And what am I targeting? London lows, Asia lows. Okay. Now, all of this in an alignment with the higher time frame analysis. It's even better if it's in line with your daily bias, but I know daily bias can be hard. But what's not hard is looking for a 1 hour fair value gap, or, looking for, a time-based liquidity, that, 7:30 open, things like that. There's other time-based liquidity zones that can be areas of draw and liquidity. You can pay attention to that. You can see where that is on your chart. So you can see potential movement, where we're being drawn to, and those kinds of things. So I know daily bias can be a little subjective, and a lot of times I do trade against it. But when I do, I'm paying attention to what's going on. I'm paying attention to order flow. Okay. For example, I'll go over how I manage a trade with order flow, and that'll be this video. Okay. Enter this trade. We kind of bounced around a little bit up here. We started displacing down. Okay. So as soon as this trade is displacing down, right? As soon as we start pushing like this, I'm definitely like, dude, we are most likely heading right to London lows. Okay. Boom. Like I am just anticipating. Okay. So when we get a move and then we start creating fair value gaps like this, okay, we created a fair value gap here. Okay. So in my brain, if we just sweep, or if this fair value gap's created and then we just blow right back through it, there might be a chance that we're just going to continue higher. Okay. Maybe I need to kick myself out of the trade. Maybe I need to, put this at break even. I'm careful with this because I don't want to risk my R&R too much. Okay. Because obviously if I put this right here and then that wick hits me, I don't get this, right? I get this baby trade now. Okay. And I get a 1-to-1. That doesn't cover any losses whatsoever. Yeah, it's a winner, but it doesn't cover any losses. I don't like that. All right. So I'll move this back down to the Asia lows. All right. And so that's not where I would have put my stop loss. That was just an example of getting stopped out too early. But we did create this fair value gap. So technically, I could put the stop loss right here. It's a little bit past break even. And if we invert this fair value gap, there's a likelihood that we're going to continue higher. Okay, then we create this fair value gap. Okay, what do? We respected it. So what could I do? I could take this and move my stop there. We respected it. Usually I'll move my stop after the creation of the next fair value gap. So until price is moving, and creates this fair value gap right here, that's when I would move this up here. Okay. Once we create another fair value gap right here, I would probably leave it because it's close. But then we create this one. Okay. What did we come back? We came back into it. What did we do? We respected it. Okay. So now I'm definitely moving this down, right? Because here's the 3 candle formation of the fair value gap. Okay. We created another one right here. We start pushing down. Okay. This is where I'm just like, I'm starting to snatch profits like crazy. Between London and Asia low, I am taking profits out. So maybe I would average somewhere around here, and that's a 1-to-4. That's great. I might even close the whole trade somewhere down here and just be like, dude, this is like, I love that R&R. I'll take it. Okay. And obviously, if I had held anything or had any runners, that's a fantastic trade. I usually don't hit runners this far because I take profits. Okay. So, but that's how you could manage this trade, right? That's how you could continue to hold profits, is to watch where fair value gaps are created, where structure is broken, like structure is broken right here, and then structure is broken right here. You could start, keeping this above the highs of the structure that's broken, above the fair value gap creations. Because if I get an inverted fair value gap starts going the other way, then there you go, right? We don't need to. Most likely the trade's going to start reversing because it's going to have, it's breaking order flow. Okay, we got a little break in order flow right here, but yet again we didn't come above this fair value gap, and then we started pushing down. So hope that was helpful. Hope these entry models help you, and hope that little sidebar of trade management was something that'll help you in the future as well. I might even split this into 2 videos, so we'll see. All right, see you in the next one.